looking at this tiny little teacup. We're going to get to something bigger, the big number, and it's 108.3. That is the fever of Garrett Baldwin. I'm sorry. No, that is the Consumer Confidence Index number for December that dropped yesterday, showing signs that consumers are getting into the holiday spirit about the current state of the economy. The sudden jump in CCI marks the highest reading of the confidence in the economy since April. Garrett, is this something to pay attention to, checking to the temperature of the economy?
Okay. Well, again, when you have to go back and look at how they actually conduct this, the Consumer Confidence Index, and the people that they ask when they do it. It's typically not a reflection of the best understanding of forward-looking economics. But the key thing is you have two components, right? The idea that inflation is easing, which kind of hard to state that it's easing, right? Because it was 7.1% in November, and everybody's saying, oh, everything's fine. In December of last year, it was 7%, and everybody was losing their mind. And the United States government is about to pass a $1.7 trillion spending bill, everybody, and increase all of the benefits for next year. And we're also going to likely see some shift in energy prices moving higher. That's the second thing. Gasoline prices dropping. The idea here that gasoline prices are going to stay sustainably low. If the United States government has to start buying back oil, you know what's going to happen. And if OPEC cuts in January, you know what's going to happen. And if China comes back online, you know what's going to happen. So again, I look at this and I say, I need to see a more consistent data in the inflation and more consistent data in the energy side. I don't anticipate that this is going to last very long. And also remember, consumer spending is tapped out. Credit is tapped out. We're going to start to see this hit a wall in February and March of this year.
Well, take a sip out of your cup with that prediction, because Garrett, I am with you on that. Also, you know, we did have consumer confidence yesterday. Would you say that's why we rallied, or was it just a technical bounce?
It looks like a technical bounce. I mean, again, Tuesday and Wednesday have been the strongest days of the year in 2022. The days of the week phenomenon is a thing. And yesterday was a good old-fashioned low-volume bid trap that, you know, pushed above that 385 level on the SPY, and it just ran for a little while. This, to me, feels very similar to April 20th. You can look at the chart and see what happened after that. Again, when we see things like this, it doesn't take much. With so much money leaving the market in the last 10 to 15 days, that money doesn't just scream back into the market. It typically stays on the sideline for a little longer, which is why we can see these moves. We hit that 3,800 level on Tuesday. We turned right back around, screamed up to nearly 3,900. And now it looks like the market's ready to give back some of those gains from yesterday.
Shaw, let's dig into this consumer confidence number. Do you think that they're, you know, is this just pretty on the surface, or what's the real dive in here?
I think it's just a natural bounce back from the stupor that consumers were in. I mean, confidence was beaten down when all you had to do was look at the headlines any which way, and the inflation was raging, the Federal Reserve was raising interest rates, the stock market is tanking, and things were pretty gloomy. And that, you know, pervaded, I think, sentiment for some time. And then all of a sudden, you know, things look like, well, maybe it's not the end of the world. Come October, did the market hit a bottom? Wait a second, have we seen peak inflation? Wait a second, wages are rising. Maybe the worst is behind us. And I think this step up in confidence is, it's nice to see going into the holidays, but I think it's a false hope. I think there's going to be a come to Jesus kind of moment in January, February, when the market heads back down, and then they realize the worst is not over.
Real quick shot. How many times have we had this conversation? We've done this going back to March 3-4 times, and every time it's like, oh, it's going to move higher. It hits a technical level, and then it gives it right back. It feels like the banks are just pushing this narrative, and retail investors keep getting pulled back into the market over and over again.
Well, one thing about, I'll say, you addressed some of the bank's expectations for where the market will end up in 2023. But you didn't mention that they also had the markets hitting lows throughout the year, and maybe some bottoming at 3,200. I saw one at 3,000. I'm at 2,800 on the worst case scenario in the S&P. And then bouncing. So they're looking for the market to come in and then bounce in the second half, and hence the move up to maybe somewhere above 4,000 in the S&P. But it comes after tanking. That's for pretty much all of them.
That is worse than 2022.
Yeah.
Just chaos. Yeah, I mean, you can buckle up. You better be trading. Absolutely. Okay. Wow.
Oh my God. You two together is double help. And that's how the world ends. Come on, guys. Let's get into some momentum.
We just tell it as it is.
Yeah.
Shaw, we need to put some rose tinted glasses on you. All right. It's getting too heavy in here, guys. But again, no, but honestly, you guys have been calling this for forever. You said, how many times have we talked about this? How many times haven't you talked about this? You've been warning us for a very long time, and it is a tradable opportunity, which is the most important part.